Welcome back, traders and investors. We have our final guest of the day on, and our final guest is Mary Beth Storjohann, and she is a certified financial planner and a founder of Workable Wealth. Mary Beth, how you doing today?
Great, Joel. Thanks so much for having me on the show.
Our pleasure. So tell us about Workable Wealth.
Yeah, Workable Wealth is actually experiencing its first birthday this month in August. I launched Workable Wealth last year. It's a technology-based financial planning firm, and I'm working with clients across the country to help them make smart choices with their money. And most of my clients are in there. I target Gen Y, and a lot of my clients are late 20s to early 40s. So they're experiencing some sort of transition. They're getting married. They're having kids. They're growing their career, trying to buy that first house. And I really help them to basically prioritize all of those goals because typically they're experiencing two or three of them at a time and craft a strategy and plan for moving themselves forward and still staying on sound financial footing.
Okay, hopefully they're having the babies after after they have their marriage, but
Yeah,
I don't think.
they're doing it in the right order. So
Well,
I have
hey,
the I have the pleasure of serving as an accountability partner for them. Is really how I work with Workable Wealth. Is we do the comprehensive financial planning. I'm fee based, so we do the financial planning up front, and then they get these really fun monthly check-ins from me, just like you would a personal coach or when you're doing the weight loss and training. I check in with them each month to make sure they're making progress and moving themselves forward.
okay, before we go into the specifics of the Gen Y, I mean, could you just break down, I mean, the different generations? I mean, obviously, they started naming them with the baby boomers, and I guess I'm kind of like the baby bust is what I like to call, and I'm kind of at the end of the baby boom. And then I don't know, was it the baby boomers, and then what did you have? Your Gen Xers, or what did you have there?
Yes, then you have your Gen X's, and
Okay.
then you have your Boomers. So actually, you have Gen Z now too, who are even like younger. Then you have Gen Y. Then you
What's
have
Gen
Gen X.
Z?
Then you have
What's
the baby
Gen
Boomers.
Z? What would you call that age group?
Gen Zs are like the younger teens right now.
Oh, the younger teens. Okay, all right. So getting into to the Gen Y here, and you're trying to give them a faceted, planning, wealth planning. I mean, that's got to be pretty difficult, with these markets. I guess it depends on how long you've been giving advice, but the market, at elevated levels here. I mean, I'm not going to get specifics, but how do you get these younger people to think long term?
It's actually relatively easy with the clients that I have coming my way. One of the so a couple things. When I launched Workable Wealth, I was told a lot, especially within our industry, is you can't you can't have a profitable business helping this generation. They don't have any money and they don't want the advice. Is one of the things I was told a lot. And then also, I hear a lot in the media that Gen Y is scared of the market. They're really conservative. And one of the things that's really interesting to me is, and there's all these reports about Gen Y sitting on mounds of cash. They have lots of cash in their portfolio. And I do see a lot of my clients actually sitting in cash. And the thing is, it's not necessarily because they're afraid of the market. There is either a lack of education around actually where to put their money. There's a lot of people who just don't even know the basic difference between a stock and a bond. So it literally starts with the baseline education when I work with my clients. And in times, it's actually okay for them to be sitting on cash because they're doing it because they want to use it for a down payment on a home. They're building up their emergency funds. So I see these reports in the media coming out about millennials being this ultra-conservative generation, and of their total portfolio, they have X amount in cash, but really they need that cash. So I think that's one of my pet peeves. But long term, as they're coming to me, it's really a balanced approach between the long-term investing for their future selves and also their today selves, because as I mentioned, they're in that immediate transition. So it's actually relatively easy to talk to them about a balance. They don't have to be overly concerned about they have to be concerned about the retirement, but they obviously need to make sure they can enjoy their lives today at some sort. And so it's really just an educational basis. And I haven't actually struggled at all with the people who are coming in and hiring me. I haven't struggled with people telling me, no, I don't want to stay for retirement, or no, I don't want to put that much towards retirement.
So are you doing this fee based? Charging a certain percentage of their portfolio, or is it an upfront fee? How do you manage your fees?
So there's a newer coming way of charging clients when it comes to this younger generation. I think there's a few practices that are popping up that charge the way I do. And what I do is I charge my clients a one-time upfront fee, so that really covers the comprehensive financial planning. And then I charge them a monthly retainer going forward. So it's kind of my annual fee broken down, but this way it makes it easier on my clients' cash flow. So they don't need to basically come up with thousands of dollars up front or even each quarter. I actually don't manage my clients' assets. I give them investment recommendations, but because they're younger, they're Gen Y, I believe that they really should keep their money, when it comes to paying fees for the portfolio. I think, Vanguard ETFs are a great way to go. I recommend a portfolio for them that route. And then I basically do the check-ins with them along the way to reallocate. But they pay me a flat fee.
And what is that upfront fee?
So the fee ranges right now, I'd say it's an average of $9.99 up front and $149 a month.
Okay. Now, you were talking about shaking up traditional views of financial planning by leveraging technology to work for Gen Yers across the country. So how are you leveraging technology for your clients?
So I am San Diego based, and I have clients from San Diego, New York, Florida, all over the place. And all of my office is paperless. So everything I do is online. I use Adobe EchoSign for my online contract. I have it, online basically invoice via PayPal each month or via QuickBooks. And I meet with my clients via Skype or Google Hangouts. So because I have the benefit of not actually I don't manage the assets, so that really helps to clear up the paperwork situation for me as well. But I really just get to use video technology, and I get rid of one of the things with financial planners is they have the fancy desks and the fancy offices, and you reserve the parking spaces for your clients, and you do these overly great things. But with Gen Y, it's all about the time commitment. And even my clients in San Diego, I meet with them via video too because it's hard for them to get out of the office. So really leveraging the technology and making it as easy as possible to make finances fun and planning for your future funds. And it's worked out well.
And when your clients come to you, do you have like an initial questionnaire that they fill out? I mean, because each client is, even though they're all or many of them are Gen Yers, each of them are different, have different financial backgrounds, different assets, different jobs. How do you differentiate? Like I said, do you have a questionnaire or do you have a way to figure out what they're looking for?
Yeah, so first when you go to my website from a business perspective as a financial planner, when somebody goes to my website, my homepage is completely different than your typical financial planner. There's no happy retired couple. There's no lighthouse. It's me with fun, empowering quotes. And there's a call to action. There's a call to opt into my newsletter because that's my way to generate basically leads and to build my newsletter list and stay in front of clients. So that's one way I gather leads. And then when somebody wants to schedule an appointment with me, when I launched, one of the things was I did the traditional back and forth via emails. What works with your calendar? What works with my calendar? And now I have an online scheduler that's called Schedule One. That basically, if somebody wants to schedule a consultation, they click a link, they fill out their name, their Skype email, and they fill out what they're looking for in a financial planner, what their goals are. So I have that ahead of time. So about a half an hour before I have my consultation calls, I pull up the email, I dig in. And then I have my own consultation call template with them. But I basically, before they call, I can get a sense of what their situation is, whether, some people call me for, getting out of debt. Some are, earning more than they thought they would and trying to figure out what to do with the extras. So I get that information just from their email ahead of time. And one of the things that I found once I opted to that is it really broke down barriers with people scheduling their calls.
Okay.
So
I'm kind of going backwards here, but and I usually ask this at the beginning of the interview. But what's your education and your market background, to get to this point where you're comfortable, making financial plans for these Gen Yers.
I was just thinking about that. I didn't mention that. So I've actually, before launching Workable Wealth, I spent close to 10 years in the financial planning industry. So first, I'm in this industry because I grew up in a family that didn't really have that strong financial education. So there was a lot of stress and anxiety about money growing up. Put my own way through school, and one of my first jobs in the industry was a receptionist with a financial planning firm here in San Diego. And then after that, I've just climbed the career ladder. I've actually been at boutique financial planning firms. I've been at big firms. Most recently, I was actually director of financial planning for a firm here in San Diego with about 10 different advisors, ran the financial planning department, and did the financial planning for a lot of pre-retirees. It's what I spent most of my career working with, as the boomer pre-retiree generation. And ultimately, it always came back to me understanding that when I went to school, I happened to major in financial planning. I got my degree in this and have been able to apply it, whereas a lot of my peers who majored in psychology, English, music, whatever it was you major in, did not have any type of financial education. If you didn't learn it from your parents, you didn't learn it, or you had to do it on your own. So I understood that right away, and there's a huge disconnect between the financial planning industry and this generation. And it's always been a passion of mine. So with the 10 years of experience backing me, the climbing of the career ladder, experiencing different firms, and really wearing a ton of different hats at some of these boutique firms I worked at, I really felt I had the expertise and the background to leverage to work with these clients.
And do you have other, do you just limit your practice or your financial planning to GenYers, or do you have, older people or younger people than that? What do you have to be between 20 and 40 to be a client of yours?
No, and even early 40s is not really Gen Y. That's really Gen X. So I usually, when I say Gen Y, if I'm ever on a radio show or a podcast and I get the email like, "Do you work with Gen X?" And I actually do, because a lot of the transitions kind of overlap. So I'd say I do work with Gen X. I've had a few pre-retirees come my way. So the older clients, there's a couple just family members, but typically I refer those out to somebody who can better service them and really can focus on the different types of planning and strategic stuff that needs to happen. I have the skills and background that in order to better streamline my practice, I prefer to refer them out.
Okay. And, you mentioned that, it's kind of a myth that, GenYers are not in the market or afraid of the market. So if if we throw that out as a consideration, what is the single biggest factor, the single biggest obstacle that you have to come over with the majority of your clients to get them comfortable with the market?
Education. It's completely education. It's understanding what, like I said before, it's the stock bonds, what a mutual fund ETF is, educating on what fees look like and how they affect their portfolio. A lot of people, if they're not invested in the market, so some of them are sitting in cash, some of them have just selected the target date returns, the target date fund in their 401ks. So it really is an education around what it means to be invested in the market and what it could look like for them over the long run to continue to build their portfolios. We talk about it in our world a lot. Unless somebody is seeking out that information, they have no idea how it actually translates to them living the kind of life that they value. So it's really the education, and that's what I spend a lot of time on when I'm delivering my financial plan. I won't even the first question I ask before I even dig into investment recommendations is, do you know what a stock is? Do you know what a bond is? And whether they're 28 or whether they're 45, a lot of them do not know. So education.
Okay, and so if they come to you and they're in that precarious position, do you educate them, or do you point them to certain books or certain online courses? How do you encourage people to educate themselves?
I have, so on workablewealth.com, I've written quite a few blog posts about different financial planning topics. So I'll definitely send them to the blog, or I'll send the blog post to them as a baseline education. But during our meetings, yes, I will educate them. I'll explain. I'll even draw pictures of, here's a mutual fund circle, little circles within it, and explain to them. Or I'll ask them to explain to me to make sure that they clearly understand. So yes, I basically spend time talking them through things, and it's an ongoing education. That's why I basically say it's an ongoing relationship with these clients. Is you're not going to get it all at once, and understandably with investments, some people's eyes just glaze over. So I usually, especially when I'm working with couples, I try to break it down and make sure that it's little doses so I don't get that. One of the things with our industry is we use a lot of generic, industry terminology with our clients, and we get the head nod that people are following, but they're not really following. So I do educate them. I don't typically send them to books. That's a great idea, though. I basically take the time to talk them through things, and if they ask for books, I'll always send them recommendations. But it's usually talking through things piece by piece, or as questions come up as they would in any, advisory relationship.
And do you have a minimum, a portfolio minimum that you will to take a client on?
No, I don't, because since I don't manage the assets, I basically I'm wide open in terms of minimum. If somebody's coming to me in terms of credit card debt, I'll usually refer them out as well because they're not, they're more focused on that debt pay down issue. But if they're in just a baseline trying to, allocate a emergency fund and start saving for some other issues in the 401k, I'll usually take them on as a client as well.
Are
And that's why my fees are that way, so I can take on any client.
Okay. Are legal and accounting issues related to invested including in your service?
No. So if they need estate planning or QuickBooks or CPA, I refer them out to my network, but I don't do any of that work for them.
Right. Yeah, that can get very complicated there.
Yeah.
And then,
And most GenYers, I mean, they need the baseline will. If they have kids, they'll roll into trust and stuff for the estate planning side of things. So I let them know what they probably need, and then I'll make a referral.
okay, and I heard you mention the Vanguard ETF. So your preferred mode of investment is through ETFs and utilizing those strategies as opposed to picking individual stocks.
Correct. Yes, especially with this age group.
Okay, all right, and when you I know without getting into real specifics of the markets here, I mean, do you have any like parameters on the downside? I mean, obviously, what you're doing is predicated on the market, continuing with its fantastic returns that it's had over the last 5 years. Is there any kind of exposure or do you give your clients any exposure or hedge them at all on the downside?
They're in a balanced portfolio, so depending on their risk tolerance, they're either in typical, my portfolios are just like I use Money Guide Pro as a software in case if I need to use the software. So my portfolios are based off of those models. So they're diversified enough to where I feel pretty confident to save for the long run, whether it's equity growth or capital growth, whatever it might be. So hedged on the downside, I think they're diversified enough for right now. I can't guarantee, obviously, the market's not going to do what it did before. So it's just a matter of keeping an eye on it and checking it every few months. And with the age group for my clients, if they had been in the market, the growth of the market over the past few years anyway. So I'd say the way I educate them is kind of, riding out the roller coaster and staying in communication is basically what I talk about. Is that I'm looking at the portfolios, they're looking at the portfolios. If they have questions, call me. Otherwise, we'll review every 6 months.
And you don't have any specific arrangements with like any of the brokerage firms or Vanguard or anything for referring clients to them?
No, I do not.
Okay.
Basically, my clients have wherever they have their money. I work with a lot of military clients too. So if they're, a lot of my clients have money at USAA, so they leave their money there, and then they use the Vanguard funds through there. So wherever they have their money is typically where they keep it.
Okay, and you just give them, a broad outlook on the market, and you're trying to incorporate things as far as having children, starting businesses, buying homes, trying to give the GenYers a broad perspective on the market. Well, Mary Beth, thanks a lot for coming on and talking about your services and Workable Wealth. We'll see if we have any GenYers in the chat room. They're going to take a look and perhaps enlist your services, but I really appreciate you taking your time out this morning and coming on Benzinga's Pre-Market Prep, brought to you
Thanks
by
so much.
Options House. Okay, we'll talk to you again soon.
Thanks, Bill.
Okay.
Bye.